Well, good evening there, traders. Thanks for joining me in this sort of Tuesday afternoon market recap. What I'll do for you is take a look at the Dow Jones Industrial Average, which is the chart on my screen at the moment. Then I'll move into both the Nasdaq and the S&P 500, followed by some of the shares in our top 12 individual trade list, which is setting up to make some nice moves leading into the month of April 2014. So what I'll do anyway is begin with the Dow Jones Industrial Average. And as you can see, just taking a look at the chart, you can see you've got two triggers set up, one at 16,665, another down the bottom here at 16,000. And 14 points. They've been set there for more or less the best part of a month, and we still haven't triggered either above or below those two individual triggers. What the market looks to be doing at the moment, however, is simply sort of rallying into that resistance level, or what we call here at Pivot Point Trading a pivot point, so a PP. And what's going to happen is that we expect the market to make a decision really in the coming week, or at least in the following sort of 3 days of trading behavior, say Wednesday, Thursday, or Friday's trading session, as to whether the market's going to break out and start to trend, which is going to be absolutely fantastic if it does, or if in fact we start seeing some bearish candlesticks. Now, bearish candlesticks are really the first indication to price reversal, and they're sort of the candlesticks that we're looking at when we go all the way back to January and February 2014. So as you can see here, for instance, we have what we call a bearish engulfing. We also get these inside days, we get spinning top candlesticks, we also get shooting stars and hammers and hangmans. These are the types of candlesticks that you want to look at right around this resistance level, which is going to give us the early sort of, or the most earliest indication that the market in fact is going to roll over at this location. At the moment, as of Tuesday's trading session, you can see we had quite a bullish day, which is very, very good to see, very interesting, but we are still quite a way away from our bullish trigger. Now, I am still neutral on the overall markets. However, in our Pivot Point Pro class over the weekend, I really sort of made it clear that I do believe the market wants to move higher, and it can and will probably break out leading into April. And it's really just continuing on from that theme, what we've seen this week. We've seen three really nice bullish candlesticks beginning, on Friday last week. And we're just at that pivot point now where something is going to happen. We don't know exactly what will happen, but this is definitely the location. It's happened here, as you can see. It's also happened here earlier in March, and now we're here in April again. And more likely what's going to happen is that we're going to simply break out bullish and continue in the bullish direction of the trend. The S&P 500 also getting very, very close to that upper trigger. As you can see, 1,889 on the bullish side. Within pennies, we're trading at 1,885. So we're literally 4 points away from that bullish trigger. But one thing I really want to see is this Dow Jones agree. This is one thing which hasn't occurred as the S&P is broken out to all-time highs, right over here. And also the Nasdaq is broken out to all-time highs, or not all-time highs, but multi-year highs going back to the year 2000. The Dow Jones Industrial Average actually hasn't broken above those old resistance highs. So once the Dow Jones Industrial Average does, then all three of the US markets are going to be in agreement. And according to Dow theory, that is what you call a healthy bullish trend, or at least a market which looks to be moving in the same direction. It's something you want to look for anyway as a swing trader. So what does that mean for us moving forward with our individual trade setups? We have Apple here. Now, Apple seems to be in some form of a symmetrical triangle. It's still a little bit messy, but I'm very excited about which way this is going to break. Sure, we have earnings coming up, but you can see the two triggers here. $542 is my bullish trigger. I also have one down here at $530.76, trading into resistance levels or targets in orange. I do think this is going to break and break very, very soon. Amazon again coming down. This was a fantastic trade from 2 weeks ago. I traded down below our 360 trigger, down to our target here at 344. We reset the trade up. A breakdown below 328 would be a nice bearish continuation, but what's happened is that we've actually started to stabilize around this support level down here. And really what's happened is that we've just closed this open gap going all the way back to, I believe, September. Now this is annoying me at the moment. I've got my Microsoft or my Windows sort of screen showing, which is not giving me the dates down the bottom, which is a little bit frustrating, but never mind, I will fix it up in a later video. Let's continue anyway. So we've got this bearish trigger set at 328. Now we're sort of asking ourselves the question, can we set up a bullish trigger? And the answer is most likely yes. And that needs to go about 349.50. That will get us a swing back up to these levels, about $370 a share. So that's definitely a really nice trade that you can look to do. Let me just delete this individual support line. There we go. Let's move on to AXP. AXP has been the most bearish, and this is really good if the market decides to roll over the Dow Jones Industrial Average. Look for a close below $88.78. Go back through our history of videos on YouTube. There'd be one from about a week or two ago where I addressed AXP and the implications for price moving all the way down to this green box on my screen, about $72 a share. So very interesting, and some really good macro support targets all the way down here if in fact we get a close below $88.78. If you want to understand why it's this figure or why this level is so important, go back and reference that video. It goes for about 5 minutes, but it's something that's really worth your time anyway. Or if you're a shareholder in AXP or a long-term investor in AXP, it's definitely something worth watching. Here we have BIDU. BIDU is just bouncing off from support, much like Amazon at the moment. Very nice support level. There isn't enough structure though to really warrant a bullish trade. We do have the exponentials and the simples which are above it. So usually what happens is that when we get a bounce, we'll retrace about 61. Let me just get the right tool. We'll retrace about 61.8% of the move, which is right here. So that coincides also with the 50 exponential. So what's really going to happen on BIDU is that we're going to rally up to around this level here, and then you can expect a resell-off or a sell-off back down to support. So although it looks technically bullish at the moment, it's not something that you want to be jumping into, because there are going to be a lot of short sellers hanging out right about this resistance level, about $168 a share. Now, Caterpillar is a great share at the moment. It looks to be breaking out. As you can see, we've had triggers everywhere in green set up, and we have a lovely candlestick pattern today. The candlestick pattern which we have today is what we call a bullish piercing pattern. So essentially what happens is we gap down, but then we trade up and pierce at least halfway into the previous day's dark candlestick. Now I've just zoomed in on the detail just so you can see it. It is a very strong 2-day pattern. It's not really in the right location, but it does tell us that price wants to move higher. It is occurring on decent volume, and again you can see the trend breakout above resistance. We could have just simply retested it, and now we're looking for the next move higher. Very interesting when you take a look at the perspective of the market and just how bullish at the market actually looks. You can see the stochastics, the RSI, and the MACD is all supporting the move. And most interestingly enough, let me just go back into the chart. There we go. ADX has turned up, which is really good, and the CCI is above the trend line. So it's telling us that Caterpillar is wanting to trend. The only thing that we have working against us is the potential for earnings to come out, which appears to be on the 24th of April 2014. So it is a good 3 weeks away. But it is something that we will need to liquidate our positions before we get into earnings. FAS, not a whole lot to talk about. You can see the two triggers there. That's all well and good. Google stopped out today for another profitable trade. A little bit annoying. We were pennies away from our ultimate target down here at about 1,100. That's fine. It was a nice little trade. It was about a 3-day trade, which only built $10 of intrinsic value into the actual options price. Having said that, that's still a really good return. No trade on Google at the moment. HD looking to break down. So this trigger down here at 77.70 is really, really good, especially on today's candlestick. We have what we call a shooting star at a resistance level. This is incredibly bearish because of this upper wick. So there's a lot of selling pressure going on in HD, even though the market in and of itself was quite bullish. HD has really come out, and the sentiment is telling us that it wants to move lower. So we're just waiting for a close below $77.70. JPM hanging out all above our bullish triggers here. We reset the trade up over the weekend. It is break even at the moment, but having said that, it does look like a very healthy breakout. You can see the volume really coming into JPM during this bullish move. We've declared dividends, we've got earnings coming up, so just monitor this trade, and if you need to, exit it before the earnings announcement comes out. Netflix had a bullish day today. That's not enough to get us into any bullish trades. We still have that open window which hasn't been filled. So just keep Netflix on your radar, but it's not something that you'd want to be getting into right away. Now, Starbucks is very, very similar to HD. This is one share which I am excited about this week on the potential of a bearish breakdown below $72.52. This candlestick during the day was once very, very bullish, all right, but later on in the session anyway, price sold off, and again that's why we have this upper wick. It's telling us that there's sellers right around these resistance levels. So you can see the rejection. We had what we call a bearish counterattack or a dark cloud cover. We then got a pullback into these support levels. This looks like, if you just see this 4-day pattern, this looks like a bear flag and it's going to break down. So we've got this entry down here at 72.52, which looks very good. All we need, of course, is price to actually confirm the trade. And then we'll be in Starbucks bearish. You can see also we can get a rejection at the 10, the 20, and the 50, which is also very bearish. We can also get a rejection at the 100 and the 200. So you can see how all of this analysis starts to line up. We'll also be breaking those swing lows. If we change to our oscillators, look at that. We've got our stochastics and our MACD saying that price wants to move lower, and our RSI is pretty weak. It's down here right around the central line or the midline, about 50. So not too lot to take away from the RSI, but things are quite neutral to bearish on Starbucks. We're just simply waiting for price. Finally, to end with, we've got XOM. XOM, you can see our bullish trigger about 97.53. Interesting trade. It is marginally profitable at the moment. We do expect it to come up to about $100 a share. We do have what we call a bearish counterattack. All right, where we gap up and trade into the previous day's close. And then today we just ended with what we call a spinning top candlestick. So there is a little bit of indecision around this pivot point, right around our entry trigger. If you want, bring your stop up, move your stop up to about $96.50. So you have $1 of risk to make about $3 of reward, a 3-to-1 risk reward ratio on that XOM trade. Things look really nice. So thanks a lot for watching this video, ladies and gentlemen. If you want to learn how to do this for yourself, come to pivotpoint-trading.com and check out our free Axioms of Stocks and Options program, which we are offering as a sort of a scholarship initiative on behalf of Pivot Point Trading. So all the best, everyone. I'll catch you during the week or later in the week for an update if in fact the markets decide to break out or break down definitively. All the best, guys. Goodbye.